In this bearish trend of gold, last week was a great buying opportunity. Our first target was 1621 up to 1607 based on Elliott wave theory. But technical confirmation came early. It made this ending diagonal chart pattern, then break upside on UK bond market crisis. It retraced, then make a new high, but on Friday it made double top on 1675 and now it is coming down. So if new high comes on this H1 time frame, the next target will be 1688, which is our strong horizontal resistance on this time frame. But H4 give us clear information. First of all, we have this Elliott wave counting WXY, and in last video our buying zone was 1621 to 1607 and bottom was made exactly between these two levels. First it went up on Bank of England news, but next day everyone was again bearish on gold because this was temporary to trend reversal in gold price from bearish to bullish. We need similar thing from US Central Bank Fed. So fundamental are still bearish and price is back on resistance zone which was made before and after FOMC. And PCE on Friday further confirmed a macro bearish trend. Since wave Y has made 100% projection at 1621, so this can be complete of wave Y, and this was our counter trend correction. And for wave Y only, the subwave ABC has made 50% retracement exactly at 1675. So I am saying this many times that this entire trend has a symmetry of making 50% retracement before making a new low. So this is our first target, and if it breaks below 1644, then you can say bearish trend is again started and counter trend has been ended, because this counter trend can go up to 1690. So our target area for seller are 1690 or below 1644, because wave count says this was our first ABC wave, then counter trend correction. This was our ABC wave and this is again a counter trend correction, and when this will end, new low will come. Now first, second and third quarter of year has been ended and October month has been started, and now we are in fourth quarter and we have three important months: this one, October, November next, and December. So you can expect gold price making bottom in this quarter, and possibility start from this month, because next month we have midterm election in USA, and after election the mindset of Biden will be completely different, since he control everything and it is part of central planning. When he change his mind, everyone will have to change. So in end of November we are expecting a bottom for gold price, and we have FOMC in November and December, and FOMC member have now confirmed 75 basis point in November and 50 in December. Now they are saying, but we need this thing in action. First, this happened that rate hike size decrease in FOMC. That will be first sign for gold bottom. So we will have to wait until November FOMC meeting. So on H4 time frame, if it goes below 1644 and near it goes this low, the good for you for selling, because next target is 1500 area. But this is counter trend correction, and we cannot say that it is zigzag or ABC triangle like last time, because chart pattern will confirm when they completely end. Before that, there is a possibility. So these two are your key level, 1690 and 1644. But daily time frame, now you can see first it breakout 1676 key horizontal support. Now it retraced back and testing this level one more time, and two daily candle has shown rejection near 1666. So all of the seller who are taking entry below this resistance level have their first target near 1577, which is our possible horizontal support, but ultimate target is 1451. This is coronavirus market bottom. And last week FOMC members said that recession will not stop them from hiking interest rate. So there is a possibility for panic market crash in stocks. They are ready to make new low. So in that condition, the target is 1577, which is our horizontal support. But weekly time frame, 1560 is our static support, because it is 50% retracement, and then 1533, which is low of this range which was made last time. And if you compare both, first we have all time high, then we have sideways correction, then breakout of range. So breakout of range has completed. Now we are in next cycle of downtrend. So in last bear market, bottom was made on rate hike, but this time bottom will be made on rate cut. So these two area, the 50% at 1560 and 61% retracement at 1439 are our key support level on weekly time frame, and our ultimate support 1361 on weekly time frame, because it has been tested many times before this range was broken. So it will not go directly to that level. First it will make a $100 counter trend correction, then it will go on new lower low. But monthly time frame, if we focus only on support and resistance, then this last monthly candle is clearly break 1676 level and closing is below that price level. So we have now clear breakout on all the time frame including monthly, and the next target is this gray area support zone from 1560 to 1533, and it is strong support zone. So before going 1367, there is a good chance that it make a counter trend correction before that level, because it was tested as a support before range breakout last time, and when it break this horizontal range on trade war bull market, it was tested as a resistance. So there is a possibility it will test again as a support. Then after counter trend correction breakout retest will be our target in 1367. And this week first we have manufacturing numbers on Monday, then on Friday we have NFP number. So back to our H1 time frame where intraday trader trade. So 1654 is broken. The next upside resistance is 1692, and you can expect a sideways correction and retest of these two support and resistance. So if price make a rejection on 1692, then you can sell with target up to 1654, or if this level breaks, then you can sell retest, but this time the target will be new lower low, and downside target are based on weekly time frame. But these two levels are your key support and resistance.